Warren Buffett receives a lot of criticism for his opinions on contemporary digital assets like Bitcoin or NFTs, even when people were prepared to spend up to $70,000 per coin and its total valuation passed the trillion-dollar mark. Buffett thinks it's nonsense. He has termed Bitcoin a useless asset that doesn't generate anything, and he wouldn't buy all of the Bitcoin in the world for $25. He has previously voiced severe criticism of new emerging technologies. If you go back to the dot-com bubble, he held similar views about internet companies. His close friend Bill Gates tried multiple times to convince him to invest in tech companies such as Microsoft. But his answer was the same every single time. He has missed many great opportunities like Amazon to Netflix to Tesla. Each of these stocks grew by a few thousand% at least. A $1,000 investment in Tesla at the time of its IPO would be worth almost $225,000 now. You could have amassed $1 million worth a $5,000 investment. A few million dollars invested in these businesses would be worth hundreds of millions of dollars at the very least. Despite the fact that he has a lot of chances when the economy is in a recession and the stock market is in free fall, his net worth is over $100 million. His net worth is over $100 billion. In fact, he dethroned Bill Gates to become the richest person in the world in 2008 amid the most recent recession. But besides crypto, tech, and NFTs, there is another industry Warren Buffett has always avoided: the housing market. Believe it or not, Warren Buffett never invests in real estate. The only real estate he has ever purchased is the house he bought in 1958 in Omaha, Nebraska, for $31,500, the equivalent of roughly $285,000 in 2020 dollars, where he has lived since then. So the natural question is, why does history's most successful investor never make real estate investments? Why does he shun real estate when it's the safest investment option available? Does Warren Buffett possess knowledge that we lack? These and many other questions will all be addressed. You can criticize Warren Buffett's investment approaches all you want, but it won't change the reality that his dedication to his approach allowed him to outperform the S&P 500 by 84% over the past 20 years, making him the most successful investor in history. He has been investing in stock market for what seems like forever, and he consistently makes money. Warren Buffett was once asked what he thinks about buying a house. His response was firm and straightforward: buy a house if you know you are going to stay in one area for a long time. In fact, he said a 30-year mortgage is the best instrument in the world. If it's such a great investment, why he always avoids real estate, even when the housing bubble collapsed. Buffett was sitting on an enormous amount of cash and knew that the housing market would climb sooner or later. So why didn't he invest in real estate? There are many reasons. Let's start with the first one. Real estate investing is distinct from stock market investing. Property management is a full-time occupation. Perhaps owning one property isn't a big deal, especially if it's only a side job. But the moment you have numerous homes, it becomes your full-time job. You still have to maintain paying your mortgage, even if you can't always rent out your property just because you own it. Next, there are always going to be problems. A property needs maintenance, and in times of crisis, you might not be able to rent it out for a longer amount of time. That does not imply that it is a bad company. It just signifies that it is a business, which means you have to manage it for the same period of time. That's why Warren Buffett never went into real estate, since he knows that his time is limited, and getting into real estate meant that he would have such less time to look for great investments. To be clear, Warren Buffett invested in real estate throughout his career, but he mostly invested in REITs, publicly traded American Real Estate Investment Trust, an investment fund that invests in real estate. Investing in them is like investing in stocks. Second reason why Buffett avoids estate is how difficult it is to find a great deal in the market. Here's how to create a successful investment. You need to locate a fantastic company that is overpriced, priced for one reason or another less than what it truly cost. It might be a company with a strong base that is simple to scale, or it might have created a technology that, when mass-produced, will yield massive revenues. The stock market is filled with inaccurately priced stocks, especially during a crisis, when people panic and start selling. The sell of crash prices. Interest rate hikes scare off investors, for example, and they start massively selling off their stocks to the point where Apple stocks, for instance, fell by around 25% from April to June. Did Apple lose a quarter of its workforce in a few months? Did its sales drop by 25% in a few months? No, the panic drove the market down, so even great business suffered. That's why it's much easier to find a great deal in the stock market than in real estate. First of all, prices in real estate don't fluctuate that fast. Yes, we have real estate crashes from time to time, but they happen once in 1 or 2 decades. And if there is a great deal in the market, a real estate agent in the area will most likely close the deal for himself before everyone else finds out. We don't have like a real estate exchange as we do for stocks, where you can go through multiple properties from the comfort of your office, because unlike real estate, companies have to go through a lengthy and harsh process of getting approved to be able to list their stocks in the stock market. They are also required to publish their financial statements every quarter, which makes it possible for Buffett to have a competitive advantage when finding great deals in the market. Real estate doesn't produce much. It provides you with a roof over your head, and that's it. Yes, it can be better roof. But how many people are willing to pay $10,000 per night? However, a business can scale up its operations and grow infinitely. Buffett acquired 5% of Apple in 2018 for $36 billion. In a couple of years, when Apple crossed the $3 trillion market, his stake grew to $160 billion. And he has also enjoyed regular dividends from Apple, averaging about $775 million annually. There is no way he could have pulled out something like in real estate, and that's not even his best deal. See's Candy Company was purchased by Buffett for $25 million in 1972, and since then it has given Berkshire $1.35 billion in profits. This is an outstanding return on investment, even taking into account the $32 million that Berkshire has put in the company over the years. The third reason is that there is just more money in the stock market than in real estate. It's a plain fact. As of 2021, the US real estate market is estimated to be worth roughly $3.7 trillion. The stock market, on the other hand, is estimated to be worth $93 trillion. A segment of the stock market is the housing market. Because of this, none of the top 10 richest person in the world are real estate investors. Each of them has created an invention or launched a business. In fact, the richest real estate investor is Shauki, a 91-year-old real estate magnate who is 98th richest person in the world with a $28.6 billion net worth. He is not just an investor, he is a real estate developer based in Hong Kong. The richest real estate developer in the US is Donald Bren, with a net worth of just $17 billion. Buffett wants to make the most of his time and abilities despite all these stock market opportunities. Why invest in real estate if he can make over $100 billion by investing in stock market? His dedication to his techniques and ideals was what first contributed to his success. He never switches to new investments just because they are popular. Perhaps the most significant lesson we can take away from him is that if you intend to stay in one place for an extended period of time, buying a home is a wise choice. However, investing in real estate requires starting a business. So ask yourself if you want to do so. There is no use in starting a business if you are neither skilled nor passionate about it. And the response is no, since you are already in a different line of work. From our discussion, what have you learned? Please let me know by leaving a comment below. And if you enjoyed this video, please press the like button, turn on the notification bell, and subscribe to Wealth-ology for more videos like this. Thank you for stopping by to watch. See you in our next video.